Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Many talk, few have to act, and one of them is the governor of Connecticut. Ned Lamont joins us right now in our studios this morning. You're wounded. For those of you on radio, he's got the sling going in that. You're on a trade mission to India. How is President Trump helping Connecticut with your trade relations with India?
India was nervous as heck about President Trump. That said, we went to Eastern India, which is by far the most innovative and entrepreneurial part. We did a trade mission there, met with 40 or 50 companies, some of which are thinking about getting a foothold in the United States. I had to spell Connecticut for them, but now they know.
Well, you have to spell Connecticut for me as well. Governor Lamont, Blumenthal out as well on this yesterday. You take electricity from Canada. If Doug Ford of Ontario or Quebec Hydro, if they pull the plug, what's it mean for Bridgeport?
We have some very high electric prices throughout New England, including Connecticut, and we bring down a lot of hydro from Canada. So you put 10% on there, that would add about $75 million. You put 20% on there, that'd be $150 million in additional fees paid for by our ratepayers. Not a great idea.
So, Governor, as you've probably seen here in the financial markets, which Tom and I deal with every day, a lot of uncertainty in the marketplace as it relates to economic policy of this new administration. We're seeing that in lower stock prices and weaker dollar. How do you see it from Connecticut? How did you and your constituency look at this current environment?
I come out of the business world. The business world hates uncertainty. Yep. You know, when I took over Connecticut, we were going from boom to bust and raising taxes, and we've had 6 straight balanced budgets trying to give people a little certainty. Our unemployment rate is way down and job growth is up. But it's just the opposite in Washington, D.C. right now. All that uncertainty, starting with tariffs, looking at deficits. A lot of businesses said, I think I'm going to hold off right now before I make that investment. That's not good.
So in Connecticut, what are the chief issues that you guys are dealing with from an economic perspective these days?
Look, we're looking at our 7th and 8th balanced budget, unless they cut Medicaid by $1 billion. You cut Medicaid by $1 billion, our budget is turned upside down, and that's true of 49 other states.
What are you hearing from the federal government about some of those big ticket items?
I don't think they know right now. I was down there. I met with folks. The secretaries had just come into office. They're coming up with their modeling, but everything runs through the White House. For those of you across the nation in your commute today, a Democrat, the governor of Connecticut is with us, Ned Lamont, as he tiptoes through all this different policy changes we're seeing. I'm going to cut to the chase. You got a vote of confidence from the people. You got 49% of the vote and won in 2018. I'm going to call it barely. You improved dramatically in 2022 with 57% of the vote. What do you say, really the polarity of the nation on right and left, but what do you say to the Democratic Party as they address from a left liberal point the reality of a centrist Lamont and others as well? A centrist Lamont probably is going to disagree with the Trump administration on a majority of things, but start with areas where we can find some agreement, we can work together. For me, that starts with energy, the high price of electricity. You know, the possibility that we could bring in natural gas or expand nuclear in our region would be transformative. A place where I've been meeting with the secretaries down in Washington, something we can get done together. Right. Well, let me we're at a piece of chalk in our hand at Harvard years ago. Ned Lamont, did the Republicans win the election? Did Trump win? Or did the Democrats lose the election because they were too far left? I think Trump won. He won because it was a change election. I look around the world, nobody wanted more of the same. And I think a little bit Kamala got stuck with the Biden legacy, couldn't differentiate herself from there. And believe me, Donald Trump represented change. When you think about the Democratic Party today, a lot of folks are saying, where's the leadership? Because it seems like President Trump and his administration are taking all the oxygen out of the room. Where is the Democratic response? Where's the Democratic policy? Where's the Democratic leadership? Who do you think is
the leader? Does the Democratic Party have a leader these days?
Well, when we're not in power, you tend to have a lot of different leaders. I'd start with the governors. The governors are not making everything a battle about Donald Trump, but when it comes to Medicaid, we're going to hit hard. We're going to work with Republican governors to say, uninsuring these poor people is just going to drive a wedge into your hospitals as well, make a difference. Find areas of specific interest and focus on that, rather than just make everything about Trump.
Congestion pricing. We've got a congestion pricing correspondent right here. What is Connecticut?
Trying to get me in trouble.
Yes. New Jersey has a particular view of congestion pricing against it. How does the folks in Connecticut
I just think you have to pay your bills. And New York City's got to pay their bills. You got a pretty antiquated subway system.
No.
Does anybody have a better idea of how to pay for things? It's so easy to say no. And right now there are a lot of people saying no. So I'm a little sympathetic to Kathy Hochul on this.
You represent an advantaged America with the heritage of J.P. Morgan and all that you've done in your life. How does America find the center again? We are, whatever anybody's politics on this show, we can all admit it's a fractured America. How do we find the center back to your family and Estes Kefauver years ago and others? How do we get back to the center, Governor Lamont?
I think we found in Connecticut, Republicans and Democrats find places we can agree. Let's say we did the biggest tax cut ever last year, but it was middle-class people and beyond. It was not for rich people. That was an area where Republicans and Democrats could get together, a $500 million tax cut. What we're doing in terms of making sure that we educate people for the jobs that are out there right now, there's a disconnect. I'm finding pretty good balance between Republicans and Democrats there. Look, there's a certain incentive to say no. That's what the nature of the opposition party is. I don't think that's good for Democrats at the national level, and I don't think that's good for Republicans at our state level.
Foreign policy, it's another area that is front and center, for better or worse, for the United States, both in the Middle East and in the Ukraine. Let's just start with Ukraine. There seems to be, I guess, a willingness to find some solution over there. And then it's a question of how you get there. And President Trump has a certain focus here. How would you approach what's happening in Ukraine, trying to find some type of peace there?
Not the way Donald Trump is doing it. Okay. Look, he wrote The Art of the Deal. You go in, you negotiate from a position of strength. Instead, Pete Hegseth just pulled the rug out from under Zelensky, put in place a whole list of concessions, a sense that we're not going to be there to back them. I think that's a terrible way to do it. And our allies around the world are watching how we treat Ukraine. I heard that when I was in India as well. I'm glad they're sitting down. I think they're negotiating. I think that's long overdue, but negotiate from a position of strength.
When I look, Governor Lamont, at Connecticut, and I think there's so many stereotypes out there, and folks, you can come up with your own stereotype. It probably starts with a Hinckley picnic boat or a Graham Banks yacht, but the reality is Connecticut's got an incredible polarity, including 16-17% foreign-born migrants, so, whatever those numbers are. Last time we talked, you said you're managing it. It's not the crisis of New York State and what Mayor Adams is facing, but give us an update on how Connecticut is tackling this polarizing issue.
Connecticut is a diverse state. We represent the diversity of the United States of America. When I go to India, I have to say, look, the stereotype of Connecticut is a bunch of Fairfield County guys in these boats you're talking about is not the reality. Our biggest percentage of international students are Indian-born students, and that we welcome that. I think that's a great strength for our state, and I think it's a great strength for our country, and I think we're getting away from that.
You come from business. You have a business background. President Trump today is addressing the Business Roundtable. What do you think the message should be from Trump to the business leaders and from the business leaders to President Trump?
I think from the business leaders to President Trump, you're seeing the incredible anxiety and uncertainty reflected in a collapsing stock market and rising unemployment rates. Look, I agree with you in terms of wanting to do big things, but you don't have to do them overnight with a chainsaw. Give us a direction of where you want to go, and we can invest accordingly. I hope the president listens to that.
I'm fascinated with a Supreme Court decision the other day with Amy Coney Barrett going over. There seems to be a primal scream of the judiciary solving legislative problems. You're part of that as an executive in Connecticut, but also almost like a legislature to Washington is a governor.
Has the legislature just given up the ghost in Washington? I mean, is Congress even part of the debate anymore?
I'm sort of glad to see the judiciary standing up to some of the intrusions from the Trump administration. That said, they haven't passed a darn thing down in Congress in the last 2 months.
Exactly. That's how people feel.
Maybe the judiciary is stepping in there. But I think the judiciary right now is the guardrails protecting our democracy.
One of the great themes here, and it's a theme of your life, is we've expanded our federal mandate away from states like Connecticut. I mean, there's a swing back here where we've said enough on entitlements. When you see the policy from your advisors, we're going to pull back from agriculture, we're going to pull back from Congress, we're going to pull back FAA and all the rest of it, the Doge stuff and all the rest. It's a primal scream of a smaller Washington. Is that feasible?
Right now it's popular because it sounds like Doge is getting rid of a bunch of bureaucrats who are, just leaning on their shovels. But every day in our state level, you're seeing how it's hitting people, starting with health care. I think that pushback's going to get louder and louder.
Ned Lamont with us, the governor of Connecticut. We continue our conversation. We welcome all of you. Paul, with the governor of Connecticut.
Governor, you and the state of Connecticut, as you mentioned, have been able to balance your budget. We're coming up to some budget discussions down in Washington, D.C. What is your advice to folks in Congress about these upcoming negotiations and trying to balance the budget and trying to push that part of the policy through?
Governors are so frustrated with Washington. We all have to balance our budget. Down in Washington, it's an afterthought. I understand that deficits are not politically that charged an issue, but you got to do the right thing. You don't have to solve it overnight, but you got to directionally start showing that you're getting your budget under control. I don't see that happening in Washington.
Are you surprised there's not more political pressure to do that? Because I think the message I've taken is that unless people force Washington to do that, either to lower expenses, raise revenue, whatever they have to do, unless there's political pressure, there's really no incentive to do anything.
Look, here at Bloomberg, we care about that deeply. We know if you don't have an honestly balanced budget, bad things happen in the future. I've paid down our debt by over $10 billion. People don't care that much. Mm-hmm. They have real needs every day. How come you're not taking care of that?
So how do you think about that? I mean, is this how do you think, if you were to balance the U.S. budget, where would you go? Expenses, revenue, both? How would you think about it?
I don't think I'd have the biggest tax cut in history for the wealthiest folks. I think that sends a wrong signal, takes us in the wrong direction. I think I would be going after efficiency, not the way Doge is doing, but in a serious way. And you can't disregard entitlements.
I got two questions left. They're both really, really important. And one with immense respect to your family, the heritage of the Lamont family on all of Wall Street. Is this a new Gilded Age? Have we skewed things so far over to billionaire mania that we're really reliving? I mean, Trump has this fixation over McKinley and tariffs. Are we reliving McKinley as a society?
I think we are a little bit. I think inflating the money supply and all the deficits have made the rich a lot richer, probably the richest they've been since 1929.
I got one final question. It's incredible. Paul emails in and says, it's just simple. Finally, Big East basketball is back. I mean, I'm looking at UConn St. John's. This could be exciting.
That's going to be a great Big East game. UConn is playing better and better. The men and the women are top flight.
The women are top flight. But in men's basketball, UConn's won 4 in a row. Are they saving it for St. John's here?
Hey, look, we're 2-time national champions.
Yeah.
We know what we're doing.
Okay, finally, after 400 years, we get new Amtrak trains. Everybody blames Connecticut for the worst wires. We fixed it. Forget about the tunnels. We fixed it New York to Washington. Give us an update on your unspeakable relationship with Amtrak to give us better, cheaper train service.
I will tell you, we're going to be able to speed up Amtrak dramatically over the next 5 years. We got significant resources from the Biden administration. We are a choke point. We got a lot of little towns, a lot of stops along the way, a lot of twists and turns around Mrs. O'Gillicuddy's home. Right. We're going to speed that up.
Is the president going to cut your submarine effort?
I don't think so. It's the strategic piece of our triad that's still undecipherable.
Folks, for those that don't know it, you take the train up and you're there and there's like a submarine over in a window. Explain to people what's going on.
It's your submarine base in Connecticut. It's top secret. They don't even know if they leave or go because they leave underwater. But explain the commitment of Connecticut to our United States Navy.
Yeah, Electric Boat, part of General Dynamics, makes most of our submarines here and down in Virginia. It's the last piece of our triad that is still undetectable, so it's really important in terms of our strategic deterrence. If you think the Soviets are coming in from the North Sea, they're going to come right by New England. It's very important what we got there in the Groton, New London area.
Awesome.
Governor, thank you for joining Bloomberg today. Greatly appreciate it. Mr. Lamont of the state of Connecticut.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
A timely conversation with someone, seen this a few times before, Margie Patel on correction. Margie Patel, of course, with Allspring. Margie, you're going to tell me to find quality free cash flow. You're going to tell me to find dividend and dividend growth. Where is it?
Well, I think really with this kind of correction we've had, you really have to look more at the growthy oriented rather than so-called defensive, high dividend kind of stocks that a lot of people have said to be popular, simply because you've had such a big correction in many of the large cap growth stocks. They actually look rather reasonably priced, maybe even about the same price earnings ratio as the average stock in the marketplace.
So how do you, when you talk to your clients, is this we don't want to be catching a falling knife scenario, or, hey, we could be selective here on some names we like?
Well, the thing is, when the market has a lot of volatility, short-term volatility, senseless, it's not really related to the fundamentals. In fact, I think we ought to bring back the uptick rule, and that might mute some of the volatility that we see.
There you go.
But when you look at the economy itself, it's chugging along at a low rate. We may have a negative quarter, many people are thinking, but we actually had a negative quarter when the Fed began to raise short rates a couple of years ago. And after that quarter, we were off to the races again. So I think that after we get through this choppy uncertainty, we may have a better market for the rest of the year.
What is the character of this pullback? I mean, when you're talking Margie Patel and the uptick rule, we could stop the show and go for an hour and a half on dumbest piece of legislation ever. But Margie, what's the character of this pullback versus any other 14 vanilla corrections? Is it just all political?
Well, I think for this cycle, as opposed to, say, 07, 08, that you have many, many more short-term traders, and that's contributed to the extreme volatility that we see, short-term volatility that we've seen, rather than fundamentals. So I think that's really the issue. But as I said, when you look at the economy, it looks pretty good. The Fed is committed to not tightening up financial conditions. And this is actually kind of a weak period right before people pay taxes, the uncertainty about the budget. So I think we have a little bit to slosh through, and then the market will stabilize.
See how she's calming?
Sure.
She should come over for dinner tonight.
Yeah, exactly.
I mean,
calm everybody down.
Vetville's portfolio's got hammered. Margie should come over and calm
Margie, a lot of folks in President Trump's economic team are acknowledging that some of his policies could result in some short-term pain, whether it's slowing growth or higher inflation. But longer term, and I think they define longer term as the back half of this year, there should be some gains, whether it's from extended tax cuts or maybe some other pro-growth initiatives. Are you buying into that? Is that short-term gain, longer-term gain? Is that something that makes sense?
Well, yes, I think so. I think the big risk with the change in administration would the temporary tax cuts expire, and then tax rates for corporations and individuals would jump up. And I think that would have been very, very negative for the stock market. So now we have a lot of uncertainty about are tariffs good or tariffs bad, and how much can they cut from the government. I think it's pretty modest at the margin that they'll actually be able to cut. But any improvement in efficiency in the government is just what business does every day. So that's pretty good. Mainly, I think the tax cut is the number one issue that will benefit the economy and the market this year.
Margie Patel with us, and we will continue with Margie Patel of Allspring Global Investments in Boston. Good morning, 92.9 FM in Boston. Good morning across the nation and community. Thank you, Ned Lamont, for some real wisdom there from Connecticut, the Democrat from Connecticut, particularly on the hydropower, if you will, from Canada. Margie Patel's with us with Allspring, and we continue. Margie, do you own bonds still, or are you just going all dividend growth?
No, in my portfolio, I've raised it a little over the last month. It's about 16, 17% of the portfolio, which is a bit higher than it's been for a while, simply because if you think this is going to be a so-so year for equities, I'm thinking 8 to maybe 10%. High yield bonds, say yielding 6.5%, looks like a pretty reasonable trade. It's just as good as a dividend income anyway.
There you go. What's the duration? You buying 40-year paper?
Well, the duration of the high yield market has shortened up a lot, and it's now about a little over 3 years. My duration is a bit longer, maybe 3.75 years.
That's really important.
It's shortened up quite a bit in the whole market.
I think a lot of people listening, Paul, they think a high yield is like, seriously, 8-year, 10-year, 12-year duration. They are 3.5 years. Wow.
That's what we've heard. Yep. Margie, so as we step back here, and if someone were to ask you, is this a healthy pullback in an otherwise decent equity market, or is this something more? What do you tell them?
I don't think it's anything more. Even last fall, when we had the market really just spike up to really incredible levels, I think most people felt the market was a little toppy, a little overpriced. So it was really set up perfectly for all the uncertainties and negative things that appeared in this part of the year. So you've had a big correction, and now NASDAQ is down, I think, about 10% year to date. Standard & Poor's about 5%. So that's not really bargain territory yet. Yeah, but considering that the Fed has basically said we'll have stability with likely cuts, that's really not a bad level to look at the market. The average PE is, I think, about 22, 24 times.
Margie, generous of you to be with us today. Thank you so much. From Boston with Allspring, Margie Patel.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We wanted to nail the math of the moment. You do that with Stephanie Roth. She's with Wolf right now. And let's go to partial differentials here. The core equation is Y equals C plus I plus G plus NX. You told me off the mic that the consumer matters. Tell me about the dynamics of the consumer into a sub 2% GDP call.
So if we think about the drivers of upside growth for the past couple of years, it's been on consumption, partially driven by the wealth effect. Now that's going the other way to some extent. And even though it's not all eroded, I mean, it's been trillions of dollars, there still is that sentiment. And then on top of that, we're starting to get hit by tariffs. We basically had double the China trade war in the last 2 months than from the 2018 trade war, and that's kind of going unnoticed to some extent. And then that doesn't factor Canada, Mexico. It doesn't factor reciprocal tariffs, which are likely coming next month. So this tariff thing is a big deal, likely to knock off 50 basis points off GDP this year.
Yeah, we just saw this morning. Some of the companies reporting earnings today, the consumer-facing companies like the sporting goods stores, Dick's, Kohl's, a big department store, the airlines, all reporting weaker than expected outlook forecast. Is that already reflecting some of the uncertainty of what we're seeing in the marketplace?
Yeah, I think it's certainly starting to. The data so far shouldn't have a material impact, but looking ahead, that's definitely the case. Uncertainty is high. It's a problem for consumer-facing companies, and it's also a problem on the capital spending side of the economy. How do you invest if you don't know the tariff rates and you don't know what the fate of the economy is going to be in the next 12 months?
I want to emphasize when Stephanie Roth, the heavyweight, comes in here and she says we knock 0.5 percentage point off on tariffs. I'm using a lower number out of Yale University, but the answer is you take 0.5, folks, and divide it by whatever your guesstimate was before. So 0.5 divided by 2.5 this is Stan Fisher 101, is a 20% markdown in the growth rate. That's a lot of angst. Can you bring that over to the labor economy?
Sure.
Are you willing to give me a 5% unemployment rate?
No, I'm not willing to give you that. I think what we'll see is we will see a bit of an uptick in the unemployment rate. I don't think we're getting to 5%. I think at that point, the Fed's going to certainly be stepping in. And then the Doge layoffs are not that big.
Right.
They add a couple of tenths at most. So it should be more just a stall speed in terms of hiring, which is why we're not forecasting a recession.
So, and that kind of goes to the administration is making the points these days when they're challenged on some of these economic uncertainties that are in the marketplace, near-term pain for some longer-term gain. Are you whether it's extension of the tax cuts or just some other economic policies that'll drive growth in the back half of 2025, are you reflecting that in any of your GDP work?
The problem is the short-term pain doesn't necessarily make obvious long-term gains, in the sense that the tariff policies, a lot of the tariffs that have been put in place are not going to bring forward manufacturing into the U.S. We don't really have the capacity nor the desire or ability to produce low-cost goods. So putting tariffs on that, putting tariffs on ag, it doesn't really produce long-term gain, and we still feel the near-term pain. And then when we're talking about the tax cuts, it's not really tax cuts. We're just extending current policy with maybe a little bit of tax cuts on tips and a couple other things, but it's net a growth negative.
Stephanie Roth with us on your morning commute with Wolf Research across the nation. On YouTube, thank you for subscribing to Bloomberg Podcast. TRC, first-time caller out on YouTube. We're up to 42 listeners. It's amazing. TRC says good morning to Stephanie Roth.
So, Stephanie, how do you think the Federal Reserve is kind of monitoring these developments here as it relates to potential slowing economic growth, potential for higher inflation? How do you think they're looking at that?
Well, certainly this week's CPI print is probably not going to be that important for them, because it doesn't factor in that. They're going to be thinking forward ahead at this point. So the things they're going to be looking at are going to be unemployment rate. Is that starting to rise? Are they getting uncomfortable with that? The pace of hiring. And then inflation expectations is going to be another key one. And what's different this time versus the last trade war in 2018 is inflation expectations long-term are driven mostly by your recent experience with inflation. In 2018, recent experience with inflation was we had none. This time, people are going to be a lot more concerned about inflation because they just experienced it.
How do you measure inflation expectations and the anchoring of said expectations? Do you do it with Michigan, or do you look at it another way?
I mean, the Fed does look at Michigan. The survey's not great, but they'll be looking at it.
Agreed.
They'll be looking at New York Fed, and then market-based, inflation expectations will be important too. So it'll be a whole host of inflation expectations measures. I do imagine UMich will still get attention, even though perhaps it's not the best reflection. New York Fed is probably a better one.
So where do we go from here in terms of thinking about this economy here? Are you forecasting that a recession is possible here? What are your odds of that?
Odds of recession right now is about 35%.
Okay.
So certainly not the base case. I think the market is just pricing in that the more elevated chance of recession. I don't think it's necessarily gonna price in a full recession. But right now, based on our models, we're looking at the market pricing in a recession about 24%. I think it probably has to get closer to our 35% before the sell-off can be stabilized.
But it's all hinges on policy. I mean, your calls, which are brilliant, can they all be amended, adjusted by one comment from the White House? That's sort of where we are, aren't we?
To some extent, and that's why we had to make such big changes to our forecast in the first place, because this is all policy related. The thing is, what we're hearing and the actions that we've seen so far are that they really believe in the tariffs. They're going big on them. Yes. Unlikely for them to reverse in a big way. And they don't seem to have much concern about the market or near-term pain. I mean, Trump has said this over and over again over the past couple of weeks.
So talk to us about the inflation risk. Well, I don't know. Like, when I'm going back and forth with Eric right now saying, I want to get an economist on who really believes and it can articulate the Trump policy, because that is the story is, near-term pain for some longer-term gain. And that's great. I just want to see how it's going to play out here.
Brilliantly said. And Steph, the heart of the matter is we've run out of capacity to do growthiness because of our debt and deficit. That's the fundamental difference from 8 years ago, right?
Yeah, and we're not able to do tax cuts from
degrees of freedom. That's a fancy
exactly. Trump was able to do massive tax cuts the last time. So the setup is very different. They're just trying to extend them, which just cost $4 trillion to do just to prevent a large tax increase on the consumer.
Remember the exam where you had degrees of freedom and chi-squared on the same exam?
No, thank you.
You did an all-nighter and finished with vodka, right? Like Tito's.
Yes,
Stephanie,
sure.
That was brilliant. Thank you so much. Don't be a stranger. Stephanie Roth driving the market lower here with Wolf Research right now. We thank her for that.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
This guy is frankly who Doug Ford should talk to in Ontario.
Yep.
He is expert on trucks. Paul, why don't you bring in our esteemed guest?
Absolutely. But there's all this talk about trade tariffs and the impact on growth and the uncertainty being injected into the economy. One of the areas where you're likely to see it initially will be in just the supply chain. I'm thinking about the ships coming over from Asia. I'm thinking about the railroads, the trucks, the air freight. What are those folks saying? Well, we've got somebody who's an expert in all that kind of stuff. Lee Klaskow, Senior Transport Analyst for Bloomberg Intelligence, joins us here in our Bloomberg Interactive Brokers studio. Lee, what are you hearing from some of your transportation companies as they think about how this economy may unfold for the remainder of the year?
It's really about uncertainty, unfortunately. I mean, after the election, I think the animal spirits were woken up. People thought that the economy was going to be humming along, lower taxes, less regulations. Obviously, that's good for the economy, good for freight. Fast forward to today, it's tariffs on, tariffs off,
Right.
And people don't know how to plan. And that's really difficult. And we're not even talking about, like your last guest mentioned, the inflationary impact on the economy and the consumer really appears to be buckling, which really is not good for freight demand. And it's kind of giving us some concern about the outlook, because in the beginning of the year, we were pretty optimistic that truckload rates could increase by mid-single digits.
You're expert at this. We're not. Paul and I are clueless. Tucker's even worse. Okay, our idea of far west is the border of Pennsylvania and New Jersey.
Right.
Let's go to I-42, North Carolina, Goldsboro to Kinston to New Bern, and then down on south from there. There are these manufacturing corridors. In your world, trucks makes them go. What do the tariffs mean to the I-42 manufacturing corridor in North Carolina?
Well, interesting enough, there is a long secular trend of bringing more manufacturing back to the United States. And that's obviously a good thing, but it takes time. So just because tariffs go on doesn't mean there's going to be a light switch and manufacturing is going to start, and that's going to just increase the demand for trucking. So what you're going to have really is not so much the industrial sector. The industrial sector is going to be impacted because of lack of demand, and we're seeing that in flatbed rates. So flatbed rates are usually tied to the industrial economy, and they've been pretty weak recently.
So that's what I was going to go to, because in your world, probably the shortest duration stuff is trucking rates, right? As opposed to long-term freight type negotiations. So in that spot market, are you seeing that yet? Are you seeing kind of
So spot rates are up, like excluding fuel surcharges, year over year by like 2 or 3%. So yay!
Yeah.
But they've been coming down recently, and that has to do with some seasonal weakness. But it's also, I think, has to do with what's going on in the overall economy.
So I'm out near Altoona, Pennsylvania, where there's that big railroad.
horseshoe. Oh, that's
big
awesome.
Horseshoe. It's like great.
Been there.
And there's like 2 trucks, and I'm going to get sandwiched. Are those trucks profitable now?
It depends who's running them. So if it's an owner operator that got into the business during the pandemic when rates were $5 or $6 a mile, those people aren't making money because they bought a very expensive truck, and now rates are $2 a mile, and that is obviously impacts your operating costs. A lot of those kind of truckers have been on life support in part because of the stimulus that was available to them from the government during the pandemic, and the savings that they were able to create during those boom times. And so we're seeing that capacity slowly leave the market. The Knights of the world and the J.B. Hunts of the world, yes, they're making money.
What are the maritime shippers, the global, shippers that you talk to? Are they expecting that these tariffs are going to be on for a long period of time, and in fact will impact global shipping?
I was at a major Trans-Pacific conference last week. It's TPM. It's held every year in Long Beach, and I got to speak to a lot of shippers, and really they don't know.
Wow.
And
no one knows.
That's the problem. No one knows, because in the morning there's a tariff, and then in the afternoon there's no tariff.
If you're joining us across the nation in your morning commute, Lee Klaskow with us. He's absolutely definitive for Bloomberg Intelligence and all this infrastructure stuff led by trucking. I think it was, I'm going to say Prudential or Beige. Or both. I can't remember. It would publish, and I would just look at it and just stop, and you'd read every word of Klaskow. This is a few years ago, folks. What would you say to Doug Ford of Toronto, Ontario, the leader of Ontario? He holds the electrical switch for, I think, 3 states. Do they have power when
when you look, forget about Carney and the election and all that. When you look at the provinces, what are they called? The states, the provinces? The provinces of Canada. Do they have a lot of sway right now?
We're learning so much this morning.
Yes. In relation to...
In relation to President Trump and tariffs.
That's way above my pay grade. I have no idea about that. I mean, obviously, if you're willing to charge a lot more for electricity, it's going to annoy a lot of your voters. So I think they do have some power.
Warren Buffett owns a railroad.
He does.
And his railroad is really predicated upon that trade from Canada through the U.S. down into Mexico. What are we hearing from that company? That's Burlington Northern Santa Fe?
Burlington Northern Santa Fe, they are more exposed to the Trans-Pacific trade.
Yep.
So they're big with stuff coming into the Port of LA and Long Beach.
Okay.
Bringing that stuff across the country. Also, they're obviously big in coal and ag. The rails have been doing okay. We've seen some volume growth of low single digits, which is good. The railroads, whether it's BN or the other class ones, they have pricing power still, so that's good. The one that's most exposed to the tariff noise is really Canadian Pacific Kansas City.
That's the one. Thank you.
They have a network that spans Canada into Mexico. It's an incredible network. They have a lot of growth opportunities relative to their peers, but that's really going to depend on tariffs. And I personally think that tariffs will be more transitory. I think I said that about inflation a couple of years ago, but yeah. So don't quote me on that. But it just feels like they're not going to be here forever. It's more of a negotiating tactic that is just create noise and havoc within the supply chain.
So Canadian National, with that wonderful acquisition down the Mississippi River, it's a big T, folks. It's across Canada, and it's down the Mississippi River. How are they affected by tariffs? And for you, is it not? I don't want to do buy, hold, sell. But is there an opportunity there?
Well, whether it's CP or CN, they are exposed to cross-border business. I would say roughly 30% to 40% of their business is cross-border. So it has a big impact on where trade goes. Obviously, if Canada is importing less Jack Daniels and we're importing less maple syrup, then that's going to impact freight flows. The thing that concerns me the most from my coverage is the forest products. Those tariffs on forest products are really going to impact the cost of housing. And if houses are more expensive, less people are going to be able to afford them. That means they're going to be building less. That means there's going to be less freight. So this is really, obviously, I know you guys know this, but tariffs are taxes. They're and somebody has to pay for it, and eventually it's the consumer. And that's going to eat up on what they spend.
So for John Tucker, a sheet of plywood at Home Depot is going to cost more.
Probably.
See, there you go.
CDX?
I don't know.
I only use CDX.
If I pick up a hammer, people run. That's what I do.
Do you want to do trucking terms? I have all these questions. Reefer, bobtail, deadhead.
Yeah.
All the trucking terms.
Reefer is a refrigerated truck. So that will haul produce or maybe even pharmaceuticals and sometimes even electronics. It doesn't have to be cold. It just needs to be a certain temperature. So, so that's reefer. It's also, I guess you can.
Well, we know.
Yeah. And then and deadhead, that's a good segue. Reefer to deadhead.
When an empty truck, I guess, right?
Yeah. Yes. The deadhead is how the distance that a truck travels without freight.
And then a bobtail is.
Are you done?
No, we could go on forever. Bobtail is without a trailer, just the cab itself.
Yeah. Okay.
There you go.
Thank you.
That's the most important part of the segment.
That'll be on the quiz.
Thanks so much.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.